Welcome. In this video, can XCN coin make new ATH? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. As we can observe on the current chart, from an Elliott wave theory perspective, it appears that the price movement is still within the structure of the second wave. Elliott wave theory is a powerful analytical method that interprets market price movements within a framework of natural rhythms, identifying impulse and corrective structures based on specific rules. According to this theory, the first wave represents the initial upward movement, while the second wave is the natural correction that follows. In essence, the price pulls back to digest the gains made in the first wave. One crucial rule that must be carefully observed is that the second wave can never fall below the starting point of the first wave. If such a scenario occurs, the current Elliott wave count becomes entirely invalid, and the analysis must be redone. Looking at the current price action, we can see that the price is hovering near the starting point of the first wave but has not yet broken below it. This suggests that the positive scenario may still be intact. If the price can hold above this critical threshold and the support area remains intact, then the third wave is expected to begin. The third wave is considered the most powerful and volatile wave in Elliott wave theory. During this wave, prices typically move upward in a strong and uninterrupted fashion, and a significant increase in momentum is observed in the market. To determine the potential target zones of the third wave, we use Fibonacci projection levels. In technical analysis, the minimum expected target for the third wave is the 1,618 Fibonacci extension level, with stronger trends potentially reaching the 2,272 level. These ratios are projected forward based on the length of the first wave. The 1,618 level, known as the golden ratio, is a powerful mathematical constant often observed in both nature and financial markets. The 2,272 level represents a more aggressive target under strong market conditions. Given the current technical setup, the fact that price is still trading above this support level indicates a high likelihood that the third wave may soon begin. However, by nature, the second wave can be drawn out and requires patience. Second waves often create indecision among market participants, shake confidence, and trigger false alarms. But it is important to remember that the third wave, which follows the second, is usually when patient investors are richly rewarded with strong upward movement. If the price manages to hold current levels and gains upward momentum, it is highly probable that the third wave will initially target the 1,618 Fibonacci extension level, and depending on the strength of the move, potentially aim for the 2,272 level. Such a movement would present a significant opportunity for investors and could open the door to substantial gains. In summary, while current volatility and minor pullbacks may test the patience of investors, it is essential to keep the bigger picture in mind and remain disciplined in following technical rules. As long as the price holds above the first wave's starting point, a massive rally in the third wave may be on the horizon. Therefore, closely monitoring key support levels and momentum indicators will be crucial for strategic decision-making. Ultimately, we may be at a very critical stage where a major opportunity is about to emerge for those who remain patient and disciplined. That's why it's vital to stay focused on the broader picture, avoid getting caught up in short-term fluctuations, and continue progressing with a rule-based approach. But relying on Elliott wave theory alone isn't enough. Other metrics must also be considered. Stay tuned. When we closely examine the chart, we see that the price has been facing a strong descending trend line that has been in effect for quite some time, exerting significant downward pressure. This descending trend line has essentially acted like a ceiling over the price, repeatedly pushing it down during every attempt to rise, creating substantial psychological and technical pressure in the market. In the past, the price has touched this trend line multiple times, and each time it encountered strong selling pressure and was forced to pull back. In other words, this trend line is not just a line on the chart, but one of the clearest representations of the ongoing battle between buyers and sellers in the market. At this point, price action is once again approaching this critical descending trend line. However, there are now some positive signals indicating that this test could produce a different outcome compared to previous attempts. If the price manages to break above this trend line with strong volume, it could signal not only a short-term rally, but also a potential escape from the long-standing downtrend. Breakouts like these often signal major structural changes in the market and can ignite much larger upward trends. If this descending trend line is broken, market sentiment is likely to shift entirely. Investors who have remained cautious due to the downward pressure or who have been minimizing losses may regain confidence. Buyers could re-enter the market more aggressively, increasing upward momentum. The resulting rally could lead to the price surpassing previous highs and potentially setting new all-time records. In other words, a break above this trend line may not just be a short-term development. It could mark the beginning of a historic long-term rally. However, it's important not to overlook a critical detail. A simple wick-based breakout will not be sufficient. The price needs to close above this descending trend line on a daily or weekly basis. Only with such a confirmed close can we truly say the trend has been broken and investor confidence will rise. If there is only an intraday breach without a proper close, it may turn out to be a fake breakout, leading to a return into the descending trend structure, a potential trap for investors. If all conditions align, and the breakout occurs with strong volume and a confirmed close, it could trigger a chain reaction in the market. Initially, short-term investors may increase their positions, followed by medium and long-term investors joining in. In short, the breakout moment will not just be a technical event, but also a catalyst that profoundly shifts market sentiment. Therefore, the current proximity of the price to this descending trendline marks a critical juncture. It feels like the calm before the storm. Everything may seem quiet, but there is a high potential for a significant move to follow. At this stage, being patient, closely monitoring developments, and making the right move at the right time will be key for investors. It's important to remember that the biggest gains in the market often go to those who remain calm and make smart decisions during the most critical moments. Right now, we're standing at the threshold of a potentially massive opportunity. If the price manages to cross this threshold, I believe strong upward moves will follow. When we take a close look at the RSI indicator, we can observe a clearly defined and strong descending trend formation. This downtrend has been present on the RSI for quite some time and has become one of the main dynamics limiting the price's upward attempts. Every time the RSI tries to rise, it touches this trend line and turns back down, signaling that selling pressure is still very much in effect in the market. At this point, we see that the RSI is once again approaching this descending trend line. We are currently at a critical threshold. If the RSI manages to break above this trend line, it won't just signal a change on the indicator itself. It could also indicate a significant transformation on the price chart. In technical analysis, a break of the RSI downtrend often coincides with the price breaking its own downward structure. In other words, a trend break on the RSI is often a precursor to a strong upward momentum in price action. Following such RSI breakouts, there is usually a rapid increase in market confidence. Investors who have previously remained cautious often re-enter the market after these strong signals, leading to a rise in both trading volume and accelerating price movements. If the RSI breaks above this descending trend line with strength, it may not just trigger a short-term bounce, but could also mark the beginning of a medium-term uptrend. However, there's another important point to keep in mind. It's not enough for the RSI to simply cross the trend line. Ideally, the breakout should be supported by strong volume, and the RSI should pull back to retest the trend line and bounce upward from it. We are not just looking for a brief breakout, but for a sustainable upward momentum. If these conditions are met, the price could simultaneously break its own descending trend line, potentially initiating a much larger bullish wave in the market. In conclusion, we are approaching a very critical breakout threshold on both the RSI indicator and the price chart. If this breakout occurs, we may be witnessing the beginning of a much larger move. Not just a short-term reaction, but possibly a full trend reversal. That's why it's crucial to monitor RSI movements closely at this stage, as it plays a key role in shaping our strategy. Sometimes the biggest opportunities lie hidden at exactly these kinds of critical turning points. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.